Hi, and welcome back to my channel. Today we're going to be talking about my outlook for 2020 in the stock market and some predictions that industry experts have for the stock market this year. More specifically, I'm really excited for Charles Schwab. By the time this video comes out, Charles Schwab's new earnings call will have come out, and we'll see how they've done in the past quarter, and I'll go ahead and go into more detail about why that's important. First of all, I'd just like to say thank you for the recent support on the channel. We're growing slowly but steadily. So if you like the video, please feel free to subscribe and let me know what you think. So as you can see on the day, we're up $11, not much at all, but definitely good to see. On the week, we are up 2.5%. And when we start zooming out, this is where things turn out to be great. This really could be a breakout moment for my portfolio. So over the last month, we're up 5.5%, which is terrific. 3 months is incredible. I was down below my total investment a couple months ago, but as we can see, up almost 10% over the past 3 months. 1 year up 5.63%, and if we look at all time, a little bit different than the year, just off by a couple days, I'm up 5.6% as well. So that is terrific to see. If we go ahead and look over here, July was actually my high point, up $189. We're up 184, so I'm hoping within the next couple of days we can reach all-time highs for me. That would be spectacular. So I'll go ahead and start this off by talking about Vivint Solar, and then we'll talk about Charles Schwab. I always like to mention it because Vivint has been great for me. People seem to really enjoy the content that I make about Vivint Solar, so we're going to talk about it. So I always like to show my total return, up almost $62 or 21%. Right here, trading for $8.35, and we'll be real quick with this. Over the last month, up just under 9%. Over the last year, up 105%, which is incredible to see. And I always like to show this 5-year graph to show the IPO was just here, roughly outside the 5-year graph. Large downward trend there in the beginning, but they've slowly been growing upwards. 100% buy rating here on Robinhood, and a company that I will continue to invest in. So next up, like I said, we're going to talk about Charles Schwab. It is one of my smaller holdings right now, but it is something I'd like to increase moving forward for a couple reasons. The biggest of which is that this price is very accessible for me, investing small amounts of money consistently. Trading just over $47 a share right now, up just under $8 all time, 9%. So on the month, we can see they are down. If we go ahead and look at the 3 months, they're up. I would say that's a little bit of a pullback more than anything else. Over the last year, they are up slightly, but it isn't great. I've talked about it in previous videos, but basically this large upward tick was the announcement that Charles Schwab would be switching to a zero commission platform, more similar to companies like Robinhood, which is really why I picked Robinhood in the first place. So this earnings call coming up tomorrow is going to be vital for the future of their company. Since the last earnings call, as I said, they've switched to a zero commission system, as well as purchasing TD Ameritrade for $26 billion. This is an enormous merger, and this earnings call is really going to pay large dividends for them in the future, no pun intended. Now again, actual dividends have not come out yet, so this isn't accurate whatsoever. It looks like they're looking at pretty stagnant earnings as a company, but I think that this is going to be important because so much has happened for them in the past quarter. As I said, by the time this video comes out, that earnings call will be public. It comes out tomorrow before the market opens, or the morning that this video comes out. So definitely take a look at that. And I would like to discuss some of these stocks that I haven't covered quite as much recently. Agilent has been a terrific one for me. This one has become a little bit more expensive, not out of my price range, but definitely a little bit more difficult for me to potentially invest in the near future. That being said, I really like these graphs. Past 3 months, we can see they're up very big. Over the last year, up 25% and 118% in the last 5 years. The reason that I really like Agilent is that, to me, this is a company that has very consistent earnings. When we go down and look at these, you are trending upward. Great earnings. There's a lot of good things to like here. Being that it's a research and development based company, this is definitely something that rounds out my portfolio, and I don't really have any other stocks that are quite similar to it. And again, we'll look at CocaCola. This is a very Interesting one for a lot of reasons. As I've discussed in the past, they're a dividend king. I think that makes them a significantly better investment than a lot of similar companies. Um, Pepsi, of course, is a large competitor. They have also been increasing their dividends, but to me, the consistency that Coca-Cola has been able to increase their dividend for the past 50 plus years is incredible, and it's a huge reason to buy. So, trading just under $57. If you look at the past month, up 3.75%. We always love to see that, and over the last year, up almost 20%. I did mention last week that some of this is a little bit inflated. The S&P 500 was up 29% over the last year, which of course is incredible. I think I read it's the second best performing year for the market in the last 50 years. So clearly, anything this year, we're going to be looking at smaller returns. And the last one that we'll look at today in terms of stocks is Walmart. The reason I want to point this out is because they haven't performed nearly as well as I would hope. So I have owned this one for a couple months and received one dividend. My total return here, minus $3.50. Clearly not huge, but in that time, the market has performed very strongly, so that isn't great to see. 67% buy rating on Robinhood, so that is great. And if we go ahead and look, I did receive a 53-cent dividend from them on January 2nd. Not a ton of money, but as I discussed in my dividend video a couple weeks prior, I did say that my goal for this year would be $100 worth of dividends, which would be a significant increase from, I believe, $21 this year. Now, the reason, I guess, that this is concerning, and I've talked about it again in the past, is that Walmart is one of the few companies that are projected to withstand the online boom in the increased prevalence of Amazon and other e-retailers. So if they are not performing well, clearly that is troubling. So if we look at the past month, down almost 5%, and I guess that's why I'm most concerned. If we look at the past month, 3 months, we see a downward trend. And as I mentioned, that's when the large majority of the gains, I shouldn't say large majority, but a large portion of the gains for the last year in the stock market occurred. So definitely this is something to watch and be cognizant of in the future. I do have this article pulled up about predictions for 2020, and I think this is a really insightful article published on marketwatch.com. And these outlooks kind of go back to what I was just saying about smaller returns for this year. So we see expectations are that companies would grow 5%, meaning the average price for the S&P 500 would be $173 per share. Its models expect earnings growth of 3.1%. And really in this article, they talk about the fact that that's not due to a lack of performance from these companies. It's really that we're seeing an inflation of prices compared to the past. Looking at that previous information, we can get a better understanding of where prices lie and where companies are possibly overvalued or people are just overly optimistic. So these graphs, I think, are a really important thing to look at. So we can see the bottom quintile, the price to earnings ratios are slightly lower than they have historically been. But again, you don't want to be looking at companies in the bottom quintile, so I don't think that's incredibly important. When we look at the S&P 500 overall, I think this is a much better indication of what's going on in the market. And we can see that the current price to earnings ratio is somewhere between 20 and 25, which is extremely high. They say 21.6, but clearly this can change daily. And when we look at since 1993, the average is down here. If I had to guess, I would say somewhere between 17 and 18. So that's where the whole market's at. But when we look at the top quintile, and clearly these would be the companies you would like to invest in the most, these price to earnings ratios are about as high or higher than they've been since 1993. This could be an indication, again, that some companies are overvalued. There may be a little bit of a slowdown in the market, but I don't see anything, any conclusive evidence that the market is going to fail or contract this year. Again, I'm not an expert, but I do think those are important things to look forward to in the future. As we can see, Bitcoin is surging up a little bit right here. That's the last thing that we'll take a look at. I am up to just over 6% of a Bitcoin, and this past week has been awesome. Still down $72 on that all time. But again, with a portfolio that I plan to hold things for multiple years, especially with Bitcoin into this next growth cycle, I'm not overly concerned about that at all. And again, up almost 10% on the week. If When we look at the last month, that has really been incredible, up about 23%. And as I've shown in the past, 143% for the last year, which is great. But definitely we've seen a retraction here since late June. When we look at 5 years, clearly Bitcoin has outperformed any and everything else in standard markets, up 3,000%. Can't expect that kind of growth again for the next 5 years, but who knows? That would be crazy, but it is a possibility with cryptocurrencies. So again, I'd like to thank you for watching my video. If you are staying all the way here to the end, I want to thank you. Like the video, subscribe, share, and I'll be back next week with some more content. Thank you.